Right now, shares of Lithium Americas Corp are trading at $9.04, surging an incredible $2.18 or 31.78% in intraday trading. Now, the immediate reaction, the market narrative that's fueling this explosive move is straightforward. The United States government is not just backing, but taking an equity stake in the company and its flagship Thacker Pass project in Nevada. This is the kind of headline that sends retail investors scrambling on their Robinhood app, checking their SoFi Invest accounts, and logging into their Fidelity brokerage portals to get a piece of the action. The expectation is simple. Government backing equals a de-risked asset, a direct line to production, and a guaranteed ticket to profiting from the electric vehicle boom. But the reality of what this deal signifies and the complex road ahead for Lithium Americas is a far more intricate story than a simple headline can convey. This isn't just about a government loan being unlocked, it's a fundamental shift in the company's structure and a geopolitical chess move that has massive implications. What many investors see is the validation. After months of speculation and uncertainty that saw the stock price languish, the Department of Energy has stepped in, not just as a lender, but as a partner. They are taking a 5% equity stake in Lithium Americas itself and a 5% stake directly in the Thacker Pass project. This is a monumental vote of confidence. It's the kind of news that causes high-frequency trading algorithms at firms like Interactive Brokers to fire off buy orders in milliseconds. The general belief is that with this federal backing, the $2.26 billion conditional loan from the DOE is now secure, the path to production is clear, and General Motors, which has already pledged over $900 million to the project, can rest easy knowing its future lithium supply is safe. This narrative positions Lithium Americas as a premier, government-endorsed play on American resource independence. It's a powerful, compelling story that seems to justify the 31% single-day surge. The market is pricing in certainty, a future where Thacker Pass is churning out the 40,000 metric tons of battery-quality lithium carbonate per year it has promised for its first phase. However, let's challenge that expectation with a dose of reality. This government intervention, while overwhelmingly positive, introduces a new layer of complexity and wasn't born from a position of pure strength. The very need for the government to take an equity stake suggests the initial loan conditions were perhaps proving difficult to meet, or that the project's risk profile was still perceived as too high for a standard debt arrangement. The deal involves the DOE deferring $182 million of debt service in the first 5 years, a clear concession. Furthermore, Lithium Americas is now required to fund a DOE loan account with an additional $120 million. This isn't just free support, it's a structured partnership with strings attached. Experienced investors using more sophisticated platforms like Schwab Intelligent Portfolios or conducting deep due diligence through their Fidelity Wealth Management advisors will be looking past the headline to understand these nuances. The government isn't just a passive benefactor, it's now a shareholder with its own interests, which will align with but not always be identical to those of other common shareholders. This fundamentally changes the corporate governance landscape. Let's dissect the recent stock movement that brought us to this pivotal moment. Before this announcement, the stock was caught in a whirlwind of speculation. Just weeks ago, reports surfaced that the Trump administration was questioning the viability of the loan initially approved by the Biden administration, sending shockwaves through the market and putting immense pressure on the shares. The trading volume we're seeing today, a colossal explosion far exceeding the daily average, is a direct release of that pent-up tension. It's a flood of capital from both retail and institutional players who were waiting on the sidelines for a definitive signal. Institutional ownership in Lithium Americas sits around 23 to 25%, with major players like General Motors Holdings LLC and various ETFs like the Global X Lithium and Battery Tech ETF LIT holding significant positions. The recent volatility has likely seen a significant reshuffling of these positions. The days leading up to this news were characterized by uncertainty, with analysts split. BMO Capital raised its price target, yet TD Cowen downgraded the stock to hold, citing the massive run-up on speculation alone. This whipsaw of analyst sentiment reflects the binary nature of the risk. The project's success hinged almost entirely on this financing package. Now that the deal is on the table, the question shifts from if to how efficiently and on what timeline. To fully grasp the significance, we need to understand what Lithium Americas actually is. Following its corporate separation, the company we are discussing, LAC, is focused solely on the Thacker Pass project in Nevada. Its former Argentinian assets now trade under a separate ticker, LAC, Lithium America Argentina Corp. This strategic split was designed to provide investors with pure-play exposure to their respective geographies. LAC's entire valuation is tethered to the successful execution of Thacker Pass, which is considered one of the largest known lithium resources in the world. Located in a massive clay deposit, the project has faced its share of hurdles, including legal challenges from environmental groups and local tribes, though it has navigated these successfully so far. The extraction process from clay is also more complex and less proven at scale compared to the brine operations common in South America or the hard rock spodumene mining in Australia. This technological risk is a key part of the deeper reality that the market often overlooks in moments of euphoria. The partnership with GM is crucial here, as the automaker has committed not only capital but a long-term offtake agreement, securing a buyer for the eventual product and providing a massive layer of validation for the project's viability. Looking forward, the landscape is both promising and fraught with potential pitfalls. The immediate catalyst is the final closing of the DOE loan and the first drawdown of funds expected in the final quarter of 2025. This will inject the necessary capital to move construction at Thacker Pass into high gear. The expectation is a smooth ramp-up to production, projected to begin in the second half of 2026. If LAC meets its construction timelines and budget, the stock could see a steady re-rating as it transitions from a speculative development company to a revenue-generating producer. The macroeconomic tailwinds are undeniable. Global demand for lithium is forecast to surge, driven by the relentless growth of the EV market and grid-scale energy storage. Albemarle, a major producer, forecasts global demand to more than double by 2030. This creates a favorable pricing environment for any new supply coming online. Government policies like the Inflation Reduction Act in the U.S. heavily incentivize domestic supply chains, placing Thacker Pass in an incredibly strategic position. Any investor with an individual brokerage account is looking for ways to play this trend, and LAC appears to be a prime candidate. Comment below and let me know. Do you believe the U.S. government's direct investment in miners is a sustainable strategy for securing critical mineral supply chains? However, the reality of execution risk cannot be ignored. Mining projects of this scale are notoriously difficult to execute. They are prone to cost overruns, construction delays, and unforeseen technical challenges. The uniqueness of the clay deposit at Thacker Pass means the company is, to some extent, treading new ground. Any hiccups in the extraction and processing technology could significantly impact production timelines and project economics. Furthermore, the lithium market itself, while on a long-term uptrend, is subject to cyclical volatility. The recent period of oversupply and price correction in 2023 and 2024 serves as a stark reminder. While the outlook for 2025 and 2026 is for tightening supply, any significant new discoveries or a slowdown in EV adoption rates could push prices. Investors using self-investing tools or robo-advisors like Schwab Intelligent Portfolios need to factor in this inherent commodity price risk. The stock's future performance isn't just about building the mine, it's about building it on time, on budget, and into a favorable market. In summary, the explosive 31% rally in Lithium Americas stock is a direct response to a powerful market narrative. The U.S. government has de-risked the Thacker Pass project by becoming an equity partner. This expectation of a clear and secure path to production is driving immense buying pressure. The reality, however, is that this government intervention, while a massive net positive, comes with its own set of complexities, including new governance structures and financial commitments. The company has successfully navigated a period of intense uncertainty, and the focus now shifts squarely to execution. The potential reward is immense, becoming a cornerstone of the American EV supply chain, but the path is still a long and challenging one. The true test will not be in the headlines, but in the quarterly reports, construction updates, and production figures that will emerge from the Nevada desert over the coming years. The market's current euphoria is pricing in the promise, but savvy investors will remain vigilant, watching to see if the reality of execution can live up to today's soaring expectations. Don't forget to like, comment, and share. Rugged! Disclaimer: this content is created only for educational purposes. It is not financial advice. Always analyze on